Good morning, everybody, and welcome back to Schwab Coaching. It's our Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner. It is a beautiful sunny morning here in Denver, Colorado. Today, I'm pleased to be joined by my friend and Schwab Regional Investment Strategist, Michael Bruskoff. Good morning, Mike. It's great to see you again. How you doing?
Good morning, Kevin. How are you doing?
Just basking in the sunshine of a beautiful morning here in Denver. The last 2.5 days have been quite stunning following a bit of snow. So, for all the complaining I do about the February snow, Mike, it's a great reminder that I'm pretty much in the best place you could be for getting all 4 seasons in the same day, if you're interested in such things.
I hear you.
So I'm pleased to be here. We're ready to get down to business, cover a bunch of news and charts with everybody today. Take a brief moment, say hi to our friend Connie there in the chat. Connie Hill will manage all that we don't get to today for you. So please make sure to be nice to Connie. You are welcome to post in there for the duration of our segment. We go about 45 minutes in total. Connie will get to the stuff that Mike and I are unable to get to. We'll certainly try to get your comments and questions brought in here as well. Please follow Connie and me on X if you're not already doing so. Connie Hill CS and Kevin Horner CS. A good way to engage with us outside of the classes that we host here for you. So love a follow there if you don't mind. Additionally, we're going to get to some disclosures and then we'll dive right into the charts and news of the day. So first and foremost, remember our conversations are exclusively informational and educational. We do not make recommendations nor endorsements for any particular strategy here. Remember, additionally, while we talk technical analysis, really what we're offering up is technical analysis concepts and strategies traders may choose to employ. So again, we educate on technical analysis. We are not encouraging you to utilize it exclusively. And further, we do not encourage you to base your decisions only off technical analysis. If you're new to this particular segment, this is our agenda. We go through a broad market analysis, everybody. We start with the major indices. We move into sectors and industry groups that are moving. Also check out stocks in the news any given day. So we've definitely got a bit of information to be aware of this week in particular on the heels of a pretty rough Friday. But it looks like we're kicking off with a nice open this morning. So let's get to it. Mike, talk to us about what we've seen here in the S&P 500. Again, Friday, kind of a rough day, but did we do anything to the major trend with Friday's price action?
Hey, Kevin, and I think, when you were just giving your disclaimers, I think that was a good spot for where we are on the S&P 500 because it's not all technicals. It's a little bit of fundamentals going on right now of the market. But to answer your question directly, did we do any technical damage to the market on Thursday and Friday of last week after dropping 1,200 points? Hard to believe. Not really that much technical damage, right? The market's been at the S&P 500 was touching touched an all-time high last week. You can see it right there on your screen. And yeah, we pulled back to your 50-day, which is kind of a quick pullback from reaching an all-time high earlier in the week to that. But if we close below the 50, Kevin, I'd be a little more concerned. If we give back 300 points that we just opened up with today, I'd give a little more concern about that as well. But right now, no technical damage. But would love to hear your thoughts on what you're seeing out there, Kevin.
Yeah, I pretty much agree with the assessment. Friday was a rough day. Obviously, that's a pretty healthy candle, as we talked. Now it didn't really look like this on Friday morning when I was on with you all with our buddy James Boyd. We were talking about the potential to hold up. We were looking at the low from Thursday as a potential bounce spot. And I hope that what traders and viewers of the show on Friday were looking at was the price action as we moved through that low from Thursday. That's when things really accelerated. And I bring it up, Mike, only because, as usual, we traders, we need to know the levels where we're going to take action, where we lose confidence in the trend. And I think the 50-day moving average for a lot of traders is one of those levels, right? And but not that 50-day, Mike, if we hold the 50-day, then we've got the same trend we've been looking at for quite a while. If we take that level out, then traders are going to look to the next level for potential support. And commonly, Mike, we've been talking quite a bit here in this particular show, the Trader Talks, just about the significance of these gap levels and how they can provide us with support, because commonly they come into play with news headlines, right? We make significant move on a bit of news or something, and we had that gap here in January on the 15th, and we really didn't test it with that last pullback, did we? So if we were to break the 50-day, Mike, I think traders would maybe be eyeing what I'm now going to make a green line here, and that level comes in right around, oh, what a shock, a flat level of around 5,900. What do you think about that? And just in terms of setting levels, because Mike, I don't know about you, but I heard over the weekend from a few viewers wondering, hey, could I have been predicting Friday's price action? And of course, doing so is commonly a fool's errand, isn't it? But we try to set these levels simply so we know how we want to approach when we start to move through these certain price levels of the market. Is that fair? Is that the way you kind of look at this too?
Kevin, 100%. I think you have to have those expectations. We always want to be correct every day and the market to go up every day. But if it doesn't go up and things start to fall off, where do we have those expectations of where we think the market might potentially go? So I think you're right on target right there, Kevin. One of the things, that I was looking at, it's funny that you have 5,900. If you open up your chart just a little bit, open it up a little bit to the lows of August. And if you did a Fibonacci retracement right there from the lows of August, you'd be right at the exact same spot right there, Kevin.
Oh, my.
So, pretty interesting that you picked that spot. But, yeah, I think that's an area that we're probably, I don't want to say that we're going to test it. But if we had to make a downward test, that's probably an area that we would like to see some support there.
Well, Mike, you know how I feel about this stuff. Anytime you can give me a line to draw and then provide me with some confluence on the levels we've already talked about, that's going to give me a little bit of enthusiasm. I'll tell you what, that does kind of strengthen that 5,900 level for important support. You agree with that? Meaning if we slip through 5,900, we've got something bigger at play and we need to pay attention then.
The problem, and I agree with you, I would like us, not to even really test that level, but if we have to go down to that level, right, we look at about 5,900, but that would really put us in a tough spot from the 50-day to the 200-day. And that would put us in a real, we'd be almost at, you'd start to see us sniffing towards that 200-day. Should we break below 5,900? We haven't even come close to it yet, but another 1,000 points, we'd be right down there. So could happen. You saw how quickly we lost 1,200 points last week on the Dow. So it could happen. That would still be a pretty big move on the S&P 500, but not out of the realm, Kevin.
Yeah. So here's how I want to leave it with you all as it relates to the S&P. And some of these details will carry forward with us as we look at these additional groups, everybody. But relative to Friday's price action, where could we have made some decisions based on Friday? Could we have, having slipped through the low of Thursday, traders could have gotten defensive. They may have then sold a little. Slipping through the 20-day moving average could have been a level at which traders got further defensive, selling a little more of their S&P investments or S&P 500 type securities if they're seeing similar price action. Under the 50-day, particularly on a close, you're going to get a little bit more defensive potentially. And then, of course, under the 5,900 is another ledge where traders will look to be taking defensive steps. Again, the reason being traders tend to build cash in instances or periods of weakness so that they can capitalize when the market turns. Well, we're not yet convinced that all of the selling is done. So we're going to just simply sit on our hands until we start to see, is there bullish price action subsequent to this big move we had on Friday? We got a lot of work to do now because that big candle from Friday means the likelihood is that all of today's price action will be fully encompassed within the candle of Friday. Chances are we're looking at a day where all of today's action is within Friday's range. Getting outside of that range would tell us quite a bit, but for now at least, we're going to monitor that. So again, we don't know what's coming. I mean, I didn't know on Friday morning at Trader Talk what was going to be the result at the end of the day, of course, but I did know how I wanted to approach it if things were to break down. And that's my hope for all of you. Give yourself those notes, know how you're going to take action, what are the specific steps you will take if we move through specific levels in the S&P 500 or the NASDAQ 100 as it might be. Let's move on over to there. Check out what's going on here, Mike. That was even just as ugly a candle. The 50-day didn't get tested with Friday's action. And today, I got to be honest, Mike, I don't think traders are too enthused by the open here even. I mean, it's up a little, but we got through the 20-day very briefly and it didn't hold, did it? So at least in the immediate short term, we don't know what's coming next, do we?
No, Kevin, I think, as you look at it, as you have it drawn there, listen, I think the NASDAQ might be feeling a little bit more pressure than the S&P 500. If you kind of look at it, if that growth scenario is, I'm saying diminishing, if it's quote unquote diminishing right now, we had PMI come out a little lackluster on Friday, coming out last Friday. Consumer sentiment came out a little negative. So yeah, you're starting to see a little bit of a scenario potentially where we might, maybe no interest rate cuts. That might not be the best of the world for the NASDAQ nor the Russell 2000 when we get there. But I think right now we've got NVIDIA earnings later on this week, which will obviously be a main driver for for the NDX. But right now, let's call it good that we're holding at that 50-day. I don't like that we've already turned red on that candle today. It never makes anybody happy. And let's keep an eye on those lows of Friday. Because that, again, that's an area, you can see it right below that low on Friday. We're sitting at that 50-day moving average. So it'll be a tight little move. Maybe the NASDAQ can consolidate, work off a little bit of some of, while it feels like the markets went nowhere, we still hit a new high last week. So maybe we can work off a little bit of that. That's not overly optimistic, but I think the NASDAQ, again, you've got the big seven, the Magnificent Seven, that it's really driving it. We've got NVIDIA coming this week, one of the Magnificent Seven. So we'll see how they can hold on. Right now, I think it's a spot where maybe we can use a little bit of support from that 50.
Can't really argue with that. I think the NVIDIA detail coming on the 26th here, that's just Wednesday after the bell. We might actually see the markets, particularly the NASDAQ, just kind of do nothing between now and then, right? I mean, it's feasible that some of the traders out there are just waiting for news from NVIDIA to know whether or not this is a legitimate bounce spot, which tells us maybe we get sandwiched between, the action, the high we made today, if that's going to be all of it, and maybe the 50-day moving average around 21,525, somewhere in there. And as long as we don't get a significant close below the 50-day, I think traders are apt to stay optimistic here. But obviously, I think it's fair to suggest that, as you called out, Mike, NVIDIA is likely to have a pretty good hint as to whether or not we're going to be able to maintain trend here in the immediate future. So again, we'll watch that for what happens tomorrow, what happens on Wednesday, obviously. But I'd be shocked. I think the thing that would shock me the most would just be a shift to either of these trend scenarios before NVIDIA hits news on Wednesday. I think we're more apt to go a little bit more sideways and really just kind of validate the pullback to what we hope to be yet another higher low, right? I mean, low here was higher, low here was higher, low here was higher, and so on. So, we've continued to do that. And as long as that's the case, Mike, a lot of traders are going to tell you that we're still bullish on the NASDAQ. Closes below the 50-day change that. So hopefully that gives us something to watch. All right. Now we got to look at that real difficult one, unfortunately, Mike. Let's look at the small caps. They have been struggling, to say the least. We got beaten back pretty aggressively yet again on Friday with that huge candle. But we've been talking about this weakness for a while on this particular segment, Mike. Just hitting our head on that 50-day moving average pretty consistently, and finally got that rollover move on Friday.
Yeah, listen, we were just talking about it, right? Hold the 50, right? And you saw it was using, once it broke the 50, almost go back a month ago, right? Go back to the beginning of the year when it broke the 50. It's been struggling since then, but let's just change our conversation from holding the 50 to now holding the 200-day moving average, a more significant moving average for the Russell 2000. You've drawn there, you've got that green line, that's a support line. Sheer coincidence that it's sitting at the 200-day. From the Russell perspective, probably would like to see that inch back above both the 50 and I'm sorry, back above the 200, my apologies, and your trend line. I think I'd like to inch above both of those to use that as support, because that's why we, when we talk technical support and resistance, those are kind of the things that we're looking for, having some support. The Russell 2000 being driven down by that, that dour picture of maybe no interest rate cuts, right? So that's kind of driving these stocks. They kind of get their fuel from lower interest rates. When it looks like we might be stagnant, they're going to those stocks are kind of, as you're seeing, as all the news has been, doesn't look like we're going to get as many interest rate cuts this year. And you've seen you've seen the Russell kind of sell off in relation to that.
We sure have. And I'll tell you what, I'm just going to make note of the fact that these lows are all the same pretty much here. Another level of extension down beneath us at this line. So just a couple of levels for monitoring, but this one here that we've just made today and Friday, certainly an important one, being that we are right at the 200-day moving average. The hope being, everybody, that maybe we've devolved into a trading range rather than simply a downtrend. But in order for that to be valid, everyone, we're going to need a bounce here in the small caps relatively soon, like today, if we're being honest, right? Because we really want to maintain this 2,200 to 2,325 area in which we've traded basically for now 2.5 months. That's going to give us some confidence that we can stay range bound. And then that gives traders maybe something from a trade opportunity standpoint. If you can trade the entrance at the bottoms of the range and exits at the top of the range, for as long as that plays out, that's one way traders will manage these sideways or consolidation windows. Let's see how yields are impacting the Russell. I know that yields jumped on Friday with our negative move in equities. And we got, actually, I say jumped, but Mike, it looks like we didn't get quite the price action I was expecting. We were buying bonds, So what happened essentially shoved yields lower. The confidence in the broad market brought buyers in on U.S. Treasuries, telling us that there was more confidence in the idea that, hey, maybe we would be happy to take a 4.4% yield on some of these investment opportunities here if we are looking at a difficult market going forward, which may have been some of the narrative we took on Friday.
Yeah, listen, I think, as you talk about yields, we've been looking for a home for yields, right? For almost a year. We've been trying to find, is there a level of support for the yield, for the 10-year? Can we find where there's an area where, hey, the bond market's going to, kind of be comfortable with an area where it's at? And maybe we're around that area right now, Kevin, right? Maybe we're around there. The markets, as I mentioned a couple of seconds ago, probably really pricing in minimal interest to no interest rate cuts this year. That's kind of what it's now looking like. It's factoring in, and maybe it can start to be comfortable with the 10-year yield, right? We've uninverted the yield curve over the last couple of months. Maybe this is now that opportunity for us to kind of build a hard to believe, Kevin, a sideways pattern in the 10-year. I don't know that that would even happen. I don't know that that's possible, but maybe we could.
It certainly looks like it. I mean, I thought this pop here that we got was going to lead to a more significant rise in yield, and it didn't. In fact, that was a rejection, really. We got lower immediately thereafter. Mike, I've been thinking that this upper ledge, changing the trend here would be the significant development. I feel as though the market is really broad market, not the small caps. Small caps we know have struggled. But the broad market has weathered this move pretty well, all things considered. I mean, we've just this week made new highs, right? So the fact that the yields are up as much as they are from, say, 3.6 to where we reside today at 4.4, we've managed to handle this pretty effectively. My concern is that we get the rally back in place, meaning we get yields climbing back through that 4.5 zone. If we get a breakdown in yields from here, man, that could actually support us a little bit, Mike, from the overall standpoint of the broad market, at least. And I'm wondering if maybe we get some of this lack of confidence in overall market leads to lower yields, which would really benefit us aggregately across the board. And I'm thinking home builders in particular, which we can get to here in just a minute. So check this out. This is why I was thinking that, Mike.
Go ahead. See what you got, Kevin.
Talked about this a little bit. This is not a wonderful development for the broad market, mainly because one thing we know, Mike, is that when housing is under pressure, it can lead or can give us a bit of a heads up about the overall strength and health of our economy. And we are seeing the housing group, the home construction, these are lows, Mike. This is the lowest we have been now since December of 23. That stands out to me. So we're looking at a pretty rough move of late. Is this forecasting something bigger that we need to be paying attention to potentially?
Kevin, I think, obviously housing is, one of the leading indicators of the U.S. economy, right? So if we look at the housing market and we look at housing affordability, we look at supply of housing, again, interest rates are obviously driving the whole thing, right? We're driving the whole thing with interest rates. And if interest rates are staying stubbornly higher, right? If it looks like that's what's going to happen, it's going to put more pressure on the consumer who's buying those houses. Because Kevin, I can't afford at a 6%, a 6% mortgage. I can only afford to buy a house. I'm just picking a number, Kevin. $400,000 versus the one that was $500,000. The problem is they're offering it for $500,000 and I'm only willing to pay $400,000. So tight supply out there. Certainly I'm in Jersey, so it is a tighter supply out here. But I do think as you look at the housing market, you kind of need this as a strength part of the market. We need to see some kind of optimism. And the thing is when you look at this chart, it was all forward looking, right? It was based upon that rates were going lower. And rates did go lower, Kevin. They did, right? We have pulled back on rates. Now it just still wants the rates to continue to go lower, and they're not. And that's the part where there's a decoupling with the housing market and the bond market, right? I think that's where we're kind of sitting at.
It's a great reminder of some of these groups of the market can give us a little bit of a heads up. One of the things that I read on X today, this was per Fortune magazine, but delistings of homes that were up for sale in the month of December, heading into the month of December, those homes being removed from sales were reaching a 9-year high in the month of December, meaning we had homes that were listed for sale and could not get sold to the seller's levels of preference. So ultimately, just sellers moving these homes off the market altogether. That's the highest number of delistings, or at least percentage-wise, as of December that we had seen in 9 years. So that stands out, Mike, as maybe a little bit of a heads up that things are shifting a little bit, and we need to be aware of it. Some of the things that one of the other things that I think makes sense for us to cover today, Mike, is just in general terms, when we start talking about the way that the S&P has been acting here. And yes, you and I, we talk quite a bit about all of these levels and the importance of these various levels for those of us who watch the market every day of the week. But the reality is, Mike, when we look at what's gone on since, say, November of last year, have we really gone anywhere in the S&P 500? We've made a few new highs, but have they led to a new trend? My answer to that would be no. And the reminder I'm giving is because, Mike, at these levels, if we're not making consistent new highs over and over and over, driving the market higher, are we in a potential period of us selling into all of this interesting buying? Meaning, are we going through distribution at these upper levels, Mike? Are we seeing a lot of churn, and are we really not going anywhere? Meaning, hey, maybe people are unloading positions at these upper levels if we're not carrying to new highs. Is that something we need to be paying attention to?
Listen, Kevin, I'm not going to dispute you. I call it, quicksand. I call it mud. Whatever you want to call it. We've really made no progress. Go back to November, right? If you think about it, so I'm in agreement with that. does that mean when you, as you said, when we look at that housing market, is it giving us that forecast that something dire else is, I'll put words in your mouth, is something worse behind it, right? I don't know. But could we see, if we were seeing some selling pressure up here, right, that churning that you just mentioned, then I think we've done a pretty good job without falling apart. If that is able to go on, and there is, and I'm not saying I don't believe you, but if I believed your theory and I said, hey, there is, the market's kind of churning up here, there is some selling pressure because we're not really breaking, we're hitting a new high by 1 point, Kevin. We're not breaking out like 100-point new high. So those numbers become, I'll say misleading. Hey, we've had so many new highs in the last couple of weeks. Yeah, Kevin, we went up 1 point plus 1 point, right? We didn't really break out. So I hear what you're saying up there. If we were able to contain that selling pressure and really absorb it, I would say that really would be an optimistic view for the market, meaning we were able to absorb some selling pressure here. We'll just trend sideways for the next couple of months. We'll wait for the next big break to the positive side. That would be very optimistic. And I'm not saying that that's out of the realm, but I think if we, when you see some selling pressure come in and you look at some of the, individual names last week that had kind of a rough week, that's really when selling pressure comes in. And then we'll see if the market's able to hold those levels, right? At that point, can we absorb selling pressure in the Mag 7? Can we absorb it in NVIDIA, in Amazon, in Microsoft, in Apple? And it's funny, even when you see some bad days in the market, you still see one of those Mag 7s go up, right? Like Apple didn't have a horrible week last week. It was everybody else. And so, yeah, if they're just moving my money from NVIDIA to Apple or vice versa, then I kind of hear what you're saying. I hear what you're saying 100%. But I don't know that there's a definitive answer to that. I think, we're still in earnings season. I'll say it's winding down. It's not in full force, but we're not out of it yet. Once you're talking to me in the middle of March with no earnings out there, then we'll see what we can handle. Then we'll see what we can handle at that point.
That's a good way of looking at it, Mike. I simply wanted to bring it up because it seems like every opportunity we have to break out has been kind of denied. I was looking at the action middle of last week there. That was the 19th. So what is that? A week ago tomorrow, or a week ago Wednesday's action, I guess. We closed at a new all-time high, and then we just immediately within 3 sessions are back to the 50-day moving average. So this was kind of like a breakout fake out move on Wednesday that got denied. Now we're seeing a little bit more selling. In fact, let's look at this SPX on a 5-minute. Mike, I should have done this right off the jump. We did not get to the pivot on our open. That looks like a rejection at the pivot on the open of the SPX. And now we reside right at 6,000, a very important level. Technically, we've traded through the lows of Friday and are looking to get a bounce. My concern, Mike, is that we get a technical move through 6,000 that may extend down. Maybe we get to S1 on the pivot. That's going to look not so great. It's going to be a 20-point move to the downside in the SPX potentially if it just continues on the level that we've seen thus far. I'm only bringing it up because it is slipping. We had a pop off the open, Mike, and that gave everybody some soothing feelings heading into the open that hasn't stuck here.
You know what, Kevin, we're 29 minutes into the day. And when you gave me the first, you spoke for the first minute of the market opening, and then you said something to me, and then I'm like, I don't know if it came out mumbled. I hope we can hold these levels today. That's what I was trying to say. Because right now I'm looking, everything's red on my screen except the Dow. The Dow's up 23 points right now, right? So it was up 165 or so when you said that to me, and I'm like, all right, let's see if it can hold on. I was hoping for maybe later this afternoon for this. I wasn't hoping in the first 28 minutes, right? So I'll be honest, that makes me a little more concerned that the sellers just came right out, that the futures were up a little bit this morning, giving you that optimism. You felt great about the weather out there in Denver. You saw the sun shining. But right now, all of a sudden, the market's getting hit with a little bit of reality right now. And, as I'm talking to you, Dow's up now 10 points, right? So we'll see. But I think the market's got some stuff to work off. I don't want to say that I'm thinking the market's, trending down, because it's still in a positive territory. But I think you're going to hear a little bit more of that churn of just kind of moving sideways for the next couple of days, couple of weeks. It could be, for all we know, right?
Yeah, and yeah, I think you're right. Look, I think I actually said that not all that long ago, right? Just just talking about the lead into NVIDIA's report this week. Calling out the low here at 6,000. Tell me that these round figures don't hold value, Mike. We got a bounce right at that 6,000 ledge. So let's hope that that's what we're going to get here today in the S&P. Is a bit of a bounce from the levels we're at now, because some slippage through the lows we've created could make things a little difficult on a short-term intraday move here in the SPX. And certainly the same can be said about the NASDAQ and the Russell, because everything's gotten a little bit more decidedly negative in the last half hour we've been speaking. So let's move on. Let's hit up the semiconductors, getting a pretty, oh my goodness, Mike, we just cannot get this group in gear. Last bounce was such a wonderful pop. Took us all of 18 bars, 2.5, 3 weeks, almost a little longer than 3 weeks, and it was 12%. And then just a clean rejection at resistance, Mike, back to the 20-day moving average. Kind of in a rough spot yet again on the semis here.
Well, I think, Kevin, we had used the semis as a leading indicator of the market for the past couple of years. Now, going back to, at this point now, you're back in almost August. You're now, 6 months of just moving sideways? Maybe they're not the lead. Maybe they're not the leaders of the market anymore. Now, you go to the left of that chart, you're going to show me an awesome chart, right? It's going to look really good when they were the leaders, right? But you know what? When you make that kind of move, and if you show me what that upward move was and how big it was, to work off an overbought pattern to move sideways for a few months, I'm not overly that negative of that. I'd be negative if we broke down below your 4,800. I'll be honest. I'd be a little more negative of that. But to work off an overbought spot, and it takes 4 months, 5 months for it to do that. It doesn't make me excited, but it doesn't make me down on it either. It just says, all right, it's moving sideways. Maybe there's a better sector for me to look at. That's all.
I think that's a really good way of putting it, Mike. We could also always take this out to a longer run view, look at it in the weekly chart, see a little bit of what you're talking about. You're right. We're essentially going to need time to digest the fantastic move, the 89% rally we got over 9 months. Yeah, going to need a little bit of time to digest that. And we might be in the midst of that. And the truth is, I think I agree with you. Essentially, we hold the green line at 4,800, still have the potential for an uptrend. If we bust through the red line at 53.50, we're going to be feeling a lot better about it. But in the meantime, maybe just sideways and consolidation, allowing this green one here. By the way, everybody, this is the 100-week simple moving average. And if we meandered sideways, Mike, for another few months here, that 100-day is going to eventually get caught up to my green line at 4,800. It's going to need some time, obviously. But if it were to do that before any breakdown, then we have another area of potential confluence there, Mike. So gives us plenty to keep an eye on here in the semis. And obviously, as we stated already, big reporter this week with NVIDIA on Wednesday. I noticed we've got a survey in the chat here, everybody. An excellent chance for you all to share your thoughts with us on the segment today. Your insights are invaluable. If you'll take the 60 to 90 seconds just to let us know what you're thinking about, what else you'd like to see from our discussions here in Trader Talk, we really, really would value that. All of those details come to me directly. I would appreciate that input, everybody. Mike, looking around at what else is moving today, the first thing that stands out to me is the movement here in staples, which has been moving higher nicely while discretionary has not. Real quick look at discretionary, you'll see we're off 1% today. That's giving us a breakdown, but staples going the opposite direction. Bit of a heads up here, potentially.
Kevin, I was going to ask, thank you for bringing it up. I agree. That was going to be my talking point today, right? When in the last 30 days, the S&P, the staples have been the best sector, and in the last 30 days, consumer discretionary has been the worst sector. So if you look at those sectors, does that now Does that mean, oh my God, Mike, why are the staples running? Does that mean the market's dying? I don't know. I don't think so. But it is an ominous sign when you start to see the staples as being the best sector in the market. That does make you want to scratch your head and say, hey, maybe I need to readjust. Am I missing something out there, Kevin, in the market? Because why are the staples running? And why do they look like they're going to break out? And why do they look like they might have some room to run after they break out? Now, am I getting ahead of myself? Have they broken out? Okay, if I follow the Horner rule, I might have a little bit of a breakout up there, right? But I don't know that they have clearly broken out. It's the same thing that we were saying with all-time highs on the S&P 500. All right, it's moving up. But this one is keeping, for me, I am keeping an eye on it because I don't like the divergence of staples trying to break out and consumer discretionary starting to break down. I don't like that divergence at all.
That is a relationship in which we'd like to see the opposite, Mike. We would like to see discretionary leading, staples lagging. This gives us a little bit of a heads up. Now, our hope could be that the selling in discretionary has gotten a little aggressive or a little overdone. We get a nice bounce, everything retreats, and we're back into range on the staples in here again. But alternatively, Michael, as you said, this has a tendency to, once breaking to the upside, to start to trend. And what I've noted about this looks like a pretty good cup and handle with a high handle. Normally the handle of the cup could drag a little bit. This has been trending higher and today made a brand new high. So maybe we're looking at a breakout potentially. And Mike, if we just talked about the range, it's a 65-point range ballpark, or call it 70, 830 to 900 could give you 970 from a measured move target over the window of time we're looking at, which is about 6 months in length. Again, measured moves are never a guarantee, but that's how a trader might evaluate that, Mike. And when you look at this on the weekly, there's nothing that would dissuade you of that notion right here. Look at the volume increase too.
Yeah, Kevin, well said. I will say just well said. Again, it's not the sector that excites probably 99% of the people that are listening to this show, right? 99% of the people listening to the show, oh, the staples are going up. But if the market's giving you a sign that something is changing in the market, we have to use the tools at our disposal to make sure that we're being observant of what's going on, right? And as we look at the staples, breaking up, trying to break out, I'll call it breaking out, pushing up to the top. And we also at the same time look at the VIX starting to kind of push up a little bit as well. Maybe those two kind of go hand in hand, right? Maybe those two kind of go hand in hand.
Mike, we got the VIX at 20. We don't get too many of those of late. We are in spike scenario here. So yeah, getting a bit more defensive as the session here wears on. And I think the takeaway right now is that the defensive nature hit in the first hour of trading, Mike. The first hour of trading can be very insightful for us, especially after big moves. If today was a immediate bounce back like we did at the open and held for the entirety of the first hour of trading, that would give bullish traders a lot more confidence, obviously. This type of price action we're seeing here in the first hour is giving us a lot less comfort. And certainly that's why you're seeing spikes in the VIX. You're probably seeing traders positioning for defensive action between now and the end of the week, knowing that I'm going to mention NVIDIA again. Look, NVIDIA could save the market. NVIDIA could lead to more selling. We truly do not know, but it is a potential catalyst for the week. And that's why we got to be aware of it, got to keep an eye on it. And for those of you wondering, how am I going to handle this now? Okay, the market's doing what it's doing. What steps are you, the trader, going to take? Mike, this is really the conversation that everybody struggles with, right? It's, all right, I'm making a decision now while the market is showing me red. My hope is that you've been thinking about this for the last 3, 4, 5 sessions and know those levels so that you're not setting those levels today, Mike, because setting those levels today is likely incorporating more emotion than you really want to in that thought process.
Well said. Yeah, listen, I think emotion is it's a feeling about trading, but that's not what you want to trade on. You want to trade on facts, right? You want to trade on price action. I don't want to trade on my emotions. And I think whether it's investing or trading, having a plan. Hey, I'm going to cut, as from a trader, right? This is called trader talk. From a trader perspective, maybe I'm cutting down my position sizing. Maybe I'm, even if I'm, normally I trade 100 shares, Kevin, today I'm trading 75, whatever that may be, right? Mm-hmm. How am I going to cut my risk if things start to get a little hotter out here? Those would be something, when I say hotter, meaning, hey, there's a little more pressure on the red side of the market, and I'm not so happy about it. What is my thought out plan? Am I just going to indiscriminately dump stocks, or am I taking tactical decisions? Maybe I'm a buyer down at these lower levels. And I think going back to what you're saying is, what is your plan as an investor? What is your plan as a trader to make sure that you're doing the things to put yourself in the best spot, Kevin? And I think both of us talk about that with our clients all the time.
Boy, do we ever, man. I tell you what, it's so important. Mike, looking at a couple of these other sectors in our final few minutes here, I wanted to headline, we are seeing positive action with healthcare today. In fact, that's giving you the best return in terms of sector action over the weekend, excuse me. Good bounce back level after, again, we watched the 20-day provide resistance on the way down, and now we've got the 20-day potentially providing support on the way back. So keeping an eye on healthcare there because we're back to the 200-day. But what I noted here, Mike, today is some major slippage on our risk-on assets. Check out what happened with tech. Let's look at IT here. A breakdown of late here had been noted as a series of lower highs yet again. And boy, that candle on Friday wasn't great, but today's is even worse because we've already slipped through the low of Friday. So, Mike, we're now hoping that we can hang on to the 20-day moving average. But just briefly, tell me, how much less confidence do traders get from those holding support moving averages when that slope of the 20-day, in this case, is downward?
Well, especially when you see such, like, if you look on Friday's action, because today's the second candle to the right, if you look at those 2 days, a couple of, I guess I'll go Wednesday and Thursday of last week, we couldn't break that short-term trend and push through to a new short-term high. We couldn't do it. You kept your lower trend line in place, and then you get a blasting on Friday that takes out almost 3 trading days before that. So you get an engulfing bear candle for 3 days, and then you open up today following straight through on that. So from your information technology screen right there, let's hold on to that 20-day moving average. That's a little bit of a hope right there, but you can see it. We're below the 50. We're below. If we go below the 20, we're going to probably test that 200, and that's probably not what we want to see. And those will usually be a little bit quicker tests. So yeah, NVIDIA might be a crucial earnings period this week, right? Right? That might be a big one to take a look at.
It could. Big level there. Let's see if we can hold the 20 on a close. Closing below it'll feel a lot different, but we'll make note of that. And then we've seen that Bitcoin has also been, again, I tend to speak about Bitcoin only from the standpoint of risk on, risk off narrative, if you will. When the market's feeling really confident, we tend to see Bitcoin holding up pretty well. But what I noted here, though, Mike, is of late, even though it's up a bit today, it's up 0.25%. There's a lot of the related securities relative to Bitcoin not performing so well here. Bitcoin by itself below the 20-day moving average for a while, back to the 4th, so about the last 3 weeks. But the breakdown that I noted here this morning was so significant. Check out what's happening with Strategy, formerly MicroStrategy, falling through a major area. The risk-on scenario, at least of late, seems to be far less confident here now, Mike, as we see these some of these Bitcoin assets just languishing of late.
Yeah, listen, obviously, if we go back to Bitcoin, that becomes the main player in the underlying of Strategy, formerly known as MicroStrategy. But I didn't like the inverse head and shoulders that you're kind of describing there, Kevin. I don't know that you said it, inverse head and shoulders, but you got the two shoulders on the right. You see the high where you got the 1100, you got the shoulder to the left. They would
Yep.
call that the neckline right there where you have your green line drawn. So I would be a little concerned if we were to break down below your green line, because that left and that right shoulder there, that's, not painting the best picture should we go below that green line. And you see how fast Bitcoin moves. So sometimes those things will move, it seems to move a little bit faster than the average stock. So that would be a spot that I would be a little concerned at. I would certainly be a little concerned breaking that spot.
All right. Well, I'm glad to hear that you and I are on the same viewpoint as it relates to this potential for this chart. Defensive of late, definitely worth monitoring here. Mike, as always, really a lovely discussion today. We covered quite a bit. I wish the market would have given us a more pleasing action to discuss, but nonetheless, I love having you on a Monday. Great to have you back. Look forward to doing it with you again next month.
All right, Kevin, thank you for having me.
Always a pleasure, Mike, and a big pleasure to have all of you with us today. So thank you for joining. Please take a moment and hit that survey if you don't mind. Follow Connie and me on X. And if you don't mind, hit that thumbs up down below. Lets us know how we did on today's segment. Helpful for us in getting us into the algorithm so that we can get as many viewers out there to see the show as possible. So thank you all for being here. Have a fantastic Monday and a great start to the week. We look forward to seeing you all again real soon.